Getting a mortgage. It's one of the biggest financial decisions you'll ever make. And for most of us, there's a simple choice we make right at the beginning that could cost us thousands of dollars. So today, we're going to unpack that choice and figure out how to make the right one. Okay, let's get into it.
So you're ready to buy a home, which is awesome, but you immediately hit this fork in the road. On one side, you've got your bank. You've been with them for years. On the other, there's this person called a mortgage broker. It feels like a pretty simple decision, right? But the path you choose can have a huge impact on your wallet. So what's the right call?
I love this quote from a user on Reddit. It just nails the difference perfectly. Going to your bank is like going to McDonald's. You know what's on the menu, and that's what you get. A broker? That's like walking into a giant buffet with tons of different options. But is more choice always better? Let's find out.
All right, first up, let's talk about the mortgage broker. Think of them as your own personal shopper for a home loan.
So, what's the big deal with a broker? Well, this slide really lays it out. Instead of you having to go to 10 different banks and fill out 10 different applications, which is a huge pain, you fill out one application with a broker. They then take that and shop it around to dozens of lenders for you. They handle the haggling, they negotiate for better rates, and this is a big one. If your situation is a little tricky, maybe you're self-employed or something, they know which lenders are more likely to say yes.
Okay, I know what you're thinking. A personal shopper sounds expensive. This has to come with some kind of crazy fee, right? It's the #1 question people have.
Well, according to the experts, that's pretty much a myth. In almost all standard cases, you, the borrower, don't pay the broker a dime. So, if you're not paying them, how in the world do they make any money?
It's actually pretty simple. The lender, the bank that ultimately gives you the loan, pays the broker a commission. It's basically a finder's fee for bringing them a new customer. And what's really important here is that there are regulations to prevent any funny business. They can't get paid by you and the lender. Plus, their pay is tied to the loan amount, not the interest rate, so they're not trying to stick you with a higher rate to make more money.
And having that access and negotiation power in your corner can make a huge, huge difference. I mean, just look at this number. This is a real-life example from a broker on Reddit. Their client went to their own bank first, and the bank offered them $3,000 in cash back. Not bad. But then they went to the broker, who found them a deal that came with $12,000 in cash back. That is a $9,000 difference, all from just making one different phone call at the very beginning.
But hey, it's not a complete slam dunk for brokers. Let's be fair. There are some really solid reasons why millions of people walk right into their bank and never even think about a broker. So let's look at the other side of the coin. The whole argument for going to your bank really boils down to two things: comfort and convenience. You've got your checking account there, maybe a credit card, you have a relationship, and sometimes that loyalty can pay off with a special discount. It's that one-stop shop feeling. For a lot of people, that simplicity is just easier. But that simplicity usually comes with a trade-off. And this slide brings us right back to that buffet analogy. Your bank is only ever going to show you what's on their menu. That's all they have to offer. A broker's whole job is to compare all the menus from all the different restaurants in town to find you the absolute best deal out there.
Now, keeping that trade-off in mind, this next number is kind of mind-blowing. What percentage of people do you think actually bother to shop around for a mortgage?
Yep, you heard that right. According to the Consumer Financial Protection Bureau, more than 3 out of every 4 people apply with just one lender. One! Think about that. By not making lenders compete for their business, they are very likely leaving thousands and thousands of dollars on the table. It's wild.
But here's where the story gets another layer. Because whether you go with a bank or a broker, you are still playing in a much bigger market. And that market has a hidden cost, a secret price tag that research from the Federal Reserve uncovered, and it affects everybody.
Okay, it's called the price of intermediation. It sounds super technical, but here's the easy way to think about it. It's the markup. It's the cut that the entire mortgage industry, both banks and brokers, takes for the service of getting you a loan.
Now here is the crazy part. When interest rates suddenly drop, what does everyone do? They all rush out to buy a house or refinance at the same time. Well, that huge flood of applications completely overwhelms the system, and just like surge pricing on Uber when everyone's trying to get a ride after a concert, that high demand drives up the hidden price for every single person getting a mortgage.
And the total cost of this industry-wide surge pricing, well, it is staggered. Researchers at the Fed estimate that just between 2009 and 2014, this effect cost American borrowers an extra $135 billion. That's not some abstract number. That is real money coming out of the pockets of regular homeowners just because the system couldn't keep up.
You know, you can talk about all these big economic forces and market dynamics, but when you boil it all down, it leads to a very simple, very human feeling. One that the Federal Trade Commission captured perfectly in a report they did. People just felt cheated.
So, after all of that, what's the actual verdict? When you're ready to buy that house, who should you call? Let's get really practical here. For the typical homebuyer, it just makes sense to start with a broker. You're going to maximize your choices and force lenders to compete, which is how you get the best rate. Now, if you have less than perfect credit or maybe a non-traditional job, a broker isn't just a good idea, they're pretty much essential. They know the niche lenders that banks won't even talk to. And if you're a high net worth buyer, you'll probably want a specialist who deals with more complex asset-based loans.
But honestly, here's the real takeaway. The most important thing here isn't who you start with, it's the method. The single most powerful thing you can do to save money on a mortgage is to get multiple offers and make people compete for your business. That's it. That's the secret sauce. Which brings us all the way back to the beginning. But maybe we can look at it a little differently now. With everything we know about the power of choice, the potential savings, and all those hidden forces in the market, maybe the real question isn't, how much does a broker cost? Maybe it's, can you really afford not to use one?